York OTE screws up almost every trader. Even if you trade logically, you are going to get screwed over if you do not know about the New York OTE. As you guys know, if a decision or London decision makes the high or low of the day, New York is usually a OTE and a continuation. This is London. This is New York. See, New York retraced OTE, and this right over here is a PM session. London, New York retracement, and eventually this is the PM session of the 159 or whatever the candle is of the daily segment. There's the bullish candle. Market make a high. Eventually make market opens high, close below. In this case, and this when it's trying to make the low, usually does an OTE, and in New York then goes lower, and eventually PM session makes the low, close, open, low, high, close. And you can see the same thing here. Now look at this photo and look at this photo. Do you see the difference? No, it's the same exact thing. As I said, it's either London session or the Asian making high of the day, not the or low of the day. If you're looking for a near continuation, you usually want the London session or the Asian to make the high or low of the day. Asian makes the high of the day. We have a high, low, higher high, lower low. Eventually we have from that high down to this low. This is the OTE, right? Over anything above this is the OTE. Look at the difference. It's the high, goes lower right when New York comes around. Look, this is New York right over here. New York comes around. Boom, boom, and eventually continuation. This is the biggest trap that people are into. Why is this so important? Why is the New York OTE so important? Because I personally myself got caught on the trap of the New York OTE, where I had a setup right down here, which is SMT, and I had a setup here, shorted down, and I got stopped out. How could you have avoided this? Just simply by waiting the OTE, by waiting for the 0.50 to 0.86 mark getting tapped, then eventually looking for setups. And for OTE, this is one other big conception people have, is that in a New York continuation, when there's an OTE present, there is no such thing as SMTs. And what I thought over here was SMT, so I was like, okay, the other candle, other correlated pair already tapped the the 0.50% mark. No, because in a OTE there is no SMT. Right? SMT is not in power. There's an OTE that's gonna happen, right? Why this is so important? And I unfortunately got caught in a trap, which will never happen again. It's I short it down here. So what people are doing is here, you see it clearly pushed to the downside. People are waiting for it to go lower, so they short down here. When they short down here, they get stopped out and eventually go their way. Why did they get stopped out? Because they FOMO'd. Basically, I didn't have a FOMO problem, but I got caught in a trap. Regardless, right? So over here, I was waiting for it to go. I was waiting for it to go lower. I had a setup, beautiful, but guess what? The setup is not beautiful at all, because the setup, there was an OTE present, and the setup must happen between 0.50 to 0.86 mark. Otherwise, if that setup is invalid, and it will have higher chance of getting stopped out, and it's a very low probability. So I had a setup, got stopped out instantly, and went up here higher, gave us the 0.50% mark of the OTE to 0.86 mark, and eventually went to our direction. You can see right over here what happened. Same thing as a picture. New York OTE, continuation, and you can see the overall, the PM made the low and the PM closed. Open, low, close. So open right over here, it was somewhere around 17 o'clock. High, low. When it's making the low, New York OTE, low, close. Same thing over here. Open, high, low, before it closed right over here. So market made an open, market made the high, goes lower, New York OTE, high, low, higher high, lower low, OTE. This is the extreme mark of the OTE. Extreme mark. You see that right there, right? Extreme mark. Boom. Then made overall open, high. Eventually, New York came around, OTE, close. And we can see right over here, the market made the close and the PM session closed it off. Okay, right over here, you can see same thing over here happened over here. In this case, I didn't get caught in a trap, but you can see a lot of people got caught in a trap over here. So New York OTE. So people are waiting so much to sell around here. They sell, they get stopped out because they sold too early or they bought too early without waiting for that deep retracement. Okay, deep retracement, then eventually market return away. These are one of the best kind of setups because usually what is OTE? For a new continuation, the general rule of thumb is that OTE starts up the next leg of the move. And next leg of the move, next leg of the move, right? Next leg, next leg. OTE always starts up the next leg. It has a 90% chance of starting the next leg up. And if it's not, if it's logically cannot be patternized. And as well as you can see, to do that, start a second leg, start the second leg, and you can see early sellers over here, they get stopped out. So the point of it is to, the point of OTE is to trap early sellers, trap early buys. In this case, we got trapped on the early selling. In this case, we didn't get trapped. The early selling, we sold at the right time, which is between the 0.50% mark, 0.86 mark. Then we sold. And you can see went down lower to overall our drawn liquidity. And on this case, there was no OTE here at all. There was no such thing as OTE here because the age decision never pressed it out. Now, let me show you guys one more example. This happened this week. This is literally this week. I'm not gonna show you guys past 10 years. I'll show you guys one. I'll show you guys the current price action of your working live market data. And this right over here is another OTE. You can see age decision open, high, before it closed, OTE, low, close, low, eventually close right over here. You see market made the open, high, OTE on New York. This is New York right over here. OTE, low, close, right? So early sellers, people try to sell over here early on and got stopped out. And once you sold around here, you're good. And eventually you can see market overall went to your draw on liquidity. As you could see right over here. And on this day, was there no OTE because age never slipped out the high? In this case, age slipped out the high, or the line slipped the high. In this case, age never slipped out the high. Neither did the age, none of the slipped the high. In this case, age slipped out the high, so you're valid. Age slipped out the high, so you're valid. Age session slipped out the high, so you're valid. In this case, Edison did not have any there. There was no OTE because Edison never souped out any high. There was no high that got souped. So selling around here, you're good. But wondering, well, look at the difference between this two, right? In this case, there was no OTE present. Why is there no OTE present? Because the Edison never souped out any high. Edison souped out a high. There's OTE present. In this case, you could sell around here. Why? Because there was no OTE here present on the ASA session or the Luna session. In this case, there's OTE present, OTE present, no OTE present over here. In this day, I don't know why I took a short. It should have been long because the obvious drawn liquidity was overall bullish, not bearish. So right over here, what we had is OTE, low, close, right? So if you're trading, say total soup right over here, just all you gotta do is mark out the total soup, the OTE. Now mark out some sort of high that you're looking to get in soup that's inside of the OTE mark, which is basically this high, and you put it like what, 7 pip stop loss to 10 pip stop loss. People usually put a 10 pip stop loss just to get this secured, right? So you put a 10 pip stop loss, you go for a 1 to 5 RR or whatever you're going for, and your take profit gets met. You see market stopped you out all over there, but your take profit got met before that. You're going for a what, 4 RR, you are chilling. But in this case, your stop loss had to be differentiate between 7 RR to between 7 pip to 10 pip. Usually the best stop losses for total soups are 7 pips to 10 pips. Anything above that or below that are kind of risky. So if you're going for a 7 pip stop loss, you are chilling. And how do you know should I go for a 7 pip or a 10 pip stop loss? It's simply by looking at the market. See, okay, how wide is my stop loss here? If your stop loss is 7 pips and it's just around here, then that stop loss is too tight. So make it go higher to make it 10 pip, and eventually should be chilling like that. So this is the OTE, and yeah. Total soup. I used to trade total soup, and I will look to trade total soup in the future, but I need to first do something before I can do that, right? I need to first forward test it more. I'll say so myself, and I'll see you guys later. Peace out.